nightly business report.
Good evening. Tonight, through February, Sri Lanka saw an increase in remittances, reflecting a shift toward official banking channels over informal money changes. This trend highlights growing remittances from recent immigrants. According to preliminary figures from the Sri Lankan Tourism Development Authority, more than 37,000 tourists have visited Sri Lanka in the first 5 days of this month. The Colombo Stock Exchange closed lower today, reversing last week's positive trend. Both the All Share Price Index and the S&P SL 20 indices saw notable drops, reflecting cautious investor sentiment. And most Asian currencies weakened, with the Chinese yuan underperforming. South Korea's KOSPI rose 0.6% and the Philippines PSEI gained 0.7%.
Good evening and thank you for joining us. Money sent home by Sri Lankan working abroad continued to grow through February, reflecting a shift towards official banking channels rather than informal money changes. Well, this trend highlights the increased remittances from those who left the country in recent years.
Sri Lankans sent back $548.1 million in remittances in February 2025, an increase for $476.2 million in February 2024, though slightly down from $573.0 million in January 2025. The year-over-year growth is significant, bringing the total remittance inflows for the first 2 months of 2025 of $1,121.1 million, marking a robust 16.3% increase. The past 3 years saw a surge in immigration, with many leaving Sri Lanka in search of better opportunities due to the pandemic and economic crisis. Long queues formed outside the Department of Immigration and Emigration as people rushed to secure passports, with shortage of marshals further complication and the process. Despite the monthly fluctuations in remittances, the overall trend shows strong growth in foreign inflows. Remittances are expected to exceed $7.0 billion in 2025, significantly strengthening Sri Lanka's balance of payment. These remittances will also play a crucial role in boosting the country's foreign currency reserves.
Tourist arrivals to Sri Lanka exceeded 37,000 within the first 5 days of March, according to provisional data from the Sri Lankan Tourism Development Authority.
Sri Lanka welcomed 37,768 international visitors between March 1st and 5th, bringing the total number of arrivals for the year of 530,746. On March 1st, the country celebrated a significant milestone by reaching 500,000 tourist arrivals, surpassing the same point last year. The daily average for tourist arrivals in March stands at 7,553. The Russian Federation has emerged as the largest source market for Sri Lanka, accounting for 15.3% of total arrivals. India follows in second place with 14.2%, while the United Kingdom ranks third with 10.2%. Other key market contributions to Sri Lanka's tourism includes Germany, France, China, Australia and Netherlands. Despite global challenges, the tourist sector is showing strong recovery to boosting tourism further. The Ministry of Tourism plans to introduce new promotional initiatives later this month, with a goal of attracting 3 million visitors and generating $5 billion in revenue by 2025.
The government is in talks with the private transport sector to develop electric vehicle infrastructure in key tourist areas, according to Sri Lankan Sustainable Energy Authority.
Sri Lanka Sustainable Energy Authority Director General J.M. Athula emphasised the need for government collaboration with the private sector to develop electric vehicle infrastructure in the country. He highlighted a growing demand for EVs in the tourism industry, but pointed out that the lack of charging stations in key tourist areas such as Kataragama, Monaragala and Ampara is hindering EV adoption. Athula noted that while the government is unable to fully fund the development of this infrastructure on its own, it is working to facilitate private sector involvement. The government is seeking to encourage private companies to establish and maintain the necessary EV charging stations. Several discussions have been held with the private transport sector, with John Keel's Holdings showing significant interest in investing in the EV infrastructure. This collaboration aims to meet the needs of the tourism industry, which is keen to adopt EVs but in currently constraints by the lack of charging facilities. This initiative is expected to boost the adoption of EVs and strengthen sustainable tourism in Sri Lanka.
Sri Lanka's confectionery industry is experiencing a notable growth this year, fueled by improving economic conditions and consecutive festive seasons. Industry stakeholders expect a 15 to 20% growth increase in sales and volume in the first 2 months of this year, driven by rising consumer confidence and post-economic crisis.
Industry stakeholders expect a 15 to 20% increase in sales and volume in the first 2 months of 2025, driven by rising consumer confidence post-economic crisis. The overlap of Ramadan and the Sinhala Tamil New Year, coupled with higher disposable incomes, has further boosted the industry's outlook. However, the formal sector still faces stiff competition from the informal market, which expanded following the pandemic. Despite the challenges of inflation and higher costs, consumers are shifting focus toward quality and brand reputation rather than price. The recent reduction in wheat flour prices has had mixed effects, benefiting the bakery sector more than the confectionery industry.
Let's go in for a short commercial break. More news out after this. Welcome back to the Nightly Business Report. The Colombo Stock Exchange ended lower today following last week's positive momentum. Both the All-Share Price Index and S&P SL20 indices experienced significant declines, indicating cautious investor sentiment. Well, for further insights, now we connect to Malintha Thirimana from LOLC Securities.
The All-Share Price Index closed at 16,001 points, reflecting a drop of 115 points from last Friday. The S&P SL20 index also closed at a loss today, finishing at 4,775 points, recording a drop of 33. Today's market turnover was especially low at just 825 million rupees, reflecting the first time market turnover dipped below 1 billion rupees since late September of last year. Intraday movements of the market also reflected a somewhat bearish sentiment among investors. Save for the first half hour of trading, where initial uptick was seen, both the SPI and SL20 indexes continued to slip downwards throughout the day, with no signs of a late rally as seen last Friday. The top negative contributors to the SPI comprised of Hatton National Bank PLC, Milsa Corp PLC, and Haley's PLC. The top gainers for the day included Tangerine Beach Hotels PLC, Laughs Power PLC non-voting, SoftLogic Finance PLC, while the top losers for the day comprised of Industrial Asphalt Ceylon PLC, SMB Finance PLC, and UB Finance Company Limited. Thank you.
The market began the week negatively, failing to maintain last week's gains in the ASPI and SL20 indices. With uncertain economic conditions, the market direction for the rest of the week remains unclear. Investors will likely focus on external factors, earning reports, and economic updates. And for further insights, we now speak with Imashi Sellaperuma, joining us from LOLC Securities.
Thank you. After September 2024, the market recorded its lowest daily turnover today at 824 million rupees. This reflects the subdued investor participation and cautious sentiment. Given the current market conditions, we anticipate turnover to remain relatively low compared to previous weeks, with the lack of strong buying interest. As many dividend payments and XD dates take effect this month, we anticipate the market to reflect these events through corresponding price adjustments. Investors are likely to factor in these changes, leading to price movements in line with expected market behavior. We expect the market to be volatile during the coming days and the investors to moving sideways. PE levels of the market is currently at 8.81, while PBV is at 1.11. These numbers shows the undervalued performance of the CSC compared to many regional peers. We anticipate increased market volatility in the coming days, with investors likely adopting a cautious wait-and-see approach. Given the current economic and market conditions, trading activity may remain quiet as participants assess key developments before making significant moves. The CSC Capital Market Investor Forum for 2025 is set to take place on 27th and 28th March, bringing together key stakeholders for both local and international markets. This event aims to foster engagement between institutional and retail investors, corporate leaders, and market experts, providing insights into the country's capital market landscape. Key economic indicators have been improving, indicating the resilience of the country's macroeconomy. Worker remittances inflow during the first 2 months of the year reached to $1.12 billion, while the private credit outstanding fell to 8,151 billion rupees level in January 2025. The banking sector had high level of excess liquidity during the December quarter, and the rupee has started to weaken again with the removal of vehicle import restriction. We expect interest rates to be at lower levels in the coming months, boosting business sentiment further.
Gold prices stayed steady in Asian trading following gains last week as the dollar remained near a 4-month low amid US trade policy uncertainties. Investors also analyzed the latest job report and Federal Reserve comments on the interest rates.
Spot gold remains steady at $2,911.21 per ounce, while gold futures for April rose by 0.1% to $2,918.27 per ounce. The Trump administration's 25% tariffs on imports from Mexico and Canada, along with additional measures targeting China, have raised concerns about potential economic slowdowns and rising inflation. These tariffs, especially on steel and aluminium imports from Canada and Mexico, set to take effect this Wednesday, have unsettled investors, contributing to increased market volatility. As a result, investors are turning to a gold and a safe haven asset amid ongoing trade tensions.
Oil prices fell today due to concerns about the impact of the US import tariffs on global economic growth and fuel demand, alongside rising output from the OPEC Plus producers. This factor dampened investor appetite for risky assets.
Brent crude slipped 6 cents to $70.30 a barrel after a 90-cent gain on Friday, while US West Texas Intermediate crude dropped 8 cents to $66.96 a barrel, following a 68-cent increase in the previous session. WTI recorded its 7th consecutive weekly decline, the longest losing streak since November 2023, while Brent fell for the 3rd straight week. The decline follows US President Donald Trump's imposition of subsequent delay on tariffs on key oil suppliers, Canada and Mexico, along with increased taxes on Chinese goods. In retaliation, China imposed tariffs on US and Canadian agricultural products.
The Sri Lankan rupee has strengthened further against the US dollar today compared to last week. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has decreased while the selling rate has also seen a reduction. Despite the Sri Lankan rupee has generally depreciated against a range of foreign currencies, although it has seen a slight appreciation against the Gulf currencies. Now let's take a closer look at how the rupee is performing against other major global currencies. Short break now. This is the nightly business report. Welcome back to the nightly business report. Love's Terminal Limited is targeting new export markets in the Maldives, Indonesia and Africa following a disruption in exports to its main market, Bangladesh, due to domestic upheavals since November last year, according to the Sri Lankan Board of Investment Officials.
Love's Terminals Limited has been unable to meet its expected export target since November, as its primary market, Bangladesh, has faced domestic upheavals, according to Sri Lanka Board of Investments officials. As a result, the company has reverted to selling 40% of its production in the local market. Despite the setback, Love's has managed to export 34.2 metric tons worth of $22 million. The company has identified new markets, including the Maldives, Indonesia and Africa. To expand its exports, Love's Terminals operates a liquefied petroleum gas transshipment terminal in Hambantota, Sri Lanka. The company is one of 17 projects under the Commercial Hub regulations. The company is one of 17 projects under the Commercial Hub regulations, which aims to boost export-oriented business. As per the regulations, LAFS is required to allocate only 40% of its production to the local market, with the remainder focused on international exports.
MS Holdings, South Asia's largest apparel manufacturer, has marked a key milestone by breaking ground for its first facility in Odisha, India.
The strategic expansion strengthens MA's regional production capabilities and positions it to tap into the fast-growing India retail market. The ceremony was attended by key officials including Suren Fernando, GCEO of MS Holdings, and representatives from the Odisha government. The new plant, set to begin apparel production next year, will focus on creating value-added products for both Indian and international markets. This move capitalizes on India's manufacturing potential and complements MA's long-established operational excellence in Sri Lanka. The expansion is expected to benefit the wider MA's group, providing access to new markets and fostering stronger regional partnerships.
NDB Wealth, Sri Lanka's largest private sector asset manager with over 350 billion in assets, has launched XAPP, a new platform offering bespoke financial solutions tailored to individual investment needs.
NDB Wealth, Sri Lanka's largest private sector asset manager, has launched XAPP, a digital investment platform designed to enhance investment management with real-time access, greater control, and improved flexibility. Leveraging advanced technology, XAPP offers seamless, efficient investing while ensuring the stability and security investors expect. The platform aims to complement NDB Wealth's strong personalized client relationships, enhancing the investment experience with a powerful digital tool. XAPP integrates with NDB Wealth's bespoke wealth management solutions, allowing clients to track and manage their investments more efficiently. The launch of XAPP seeks to address the limited awareness many Sri Lankans have regarding alternative investment options that offer greater flexibility and returns more than the traditional saving methods. While fixed deposits and conventional saving accounts remain popular, XAPP introduces smarter alternatives for enhanced financial growth opportunities. By providing a user-friendly platform, NDB Wealth aims to educate and empower investors to make informed financial decisions.
Kasturi Angela Wilson, a young business leader, has been appointed as an independent non-executive director on the board of Senkatagala Finance PLC. She is the first chief operating officer for a 5-hour international corporation and has a career spanning over 3 decades.
Previously, she served as the group CEO of Hemas Holdings PLC from October 2020 to March 2024, leading the company through Sri Lanka's toughest economic period. Kasturi made history as the first female group CEO of a listed conglomerate in Sri Lanka. She is an alumna of the Harvard Business School and a fellow member of the Chartered Institute of Management Accountants. Kasturi's career began in 1988 and she held key roles at Hemas Holdings, including overseeing its pharmaceuticals, surgicals and diagnostic sectors.
Hales Solar has achieved a significant milestone by successfully completing a groundbreaking solar energy project for its Jehovah's Witness branch office in Vattala.
Hales Solar has completed Sri Lanka's largest solar-powered battery backup system for Jehovah's Witnesses branch office in Vattala. The project features a 2 MWh battery backup powered by a solar photovoltaic system, ensuring uninterrupted power for up to 3 days. It utilizes a solar panel car park roof, maximizing capacity without requiring additional land use. The design preserves the property's original architecture while addressing the net plus energy challenge, optimizing costs and improving efficiency. Hales Solar's commitment to sustainable energy solutions is highlighted by the innovative project. Rashane Pereira, Executive Director and CEO of Hales Solar, expressed pride in the achievement, calling it a new benchmark for renewable energy innovation in Sri Lanka.
Hatton National Bank PLC has launched an education loan tailored for CFA students, supporting aspiring chartered financial analysts in Sri Lanka.
This initiative highlights HNB's commitment to empowering the next generation of finance professionals and fostering professional education. With increasing demand for CFA certification, HNB's loan aims to ease the financial burden many candidates face in pursuing this globally recognized qualification. The bank has partnered with CFA Society Sri Lanka to enhance access to high-quality financial education and career advancement opportunities. This collaboration underscores a shared goal of promoting financial literacy and professional growth in the industry. Through this initiative, H&B aims to equip professionals with the skills needed to thrive in a competitive global market.
A short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian currencies weakened today, with the Chinese yuan lagging behind its peers due to persistent deflationary signals in the country. The yuan was one of the worst performers in the region, with the US dollar pair rising by 0.3%. The South Korean won also faced pressure, with its US dollar pair climbing 0.4% amid concerns over renewed political strife.
South Korea's Kospi was up by 0.6%, while the Philippines' PSEI Composite Index rose 0.7%. Japan's Nikkei 225 gained 0.7%, with the topics also edging 0.2% higher. Australia's S&P ASX 200 ticked 0.3% higher, slowing positive momentum. In contrast, Indonesia's Jakarta Stock Exchange Composite Index fell 0.8%, and Thailand's SET Index declined slightly by 0.2%. Futures for India's Nifty 50 were down by 0.4%. Despite mixed performances, investor sentiment remains cautious and amid global economic uncertainties. Regional markets are expected to remain volatile as traders assess the impact of inflationary pressures and geopolitical tensions.
Directors of Japan's third largest automaker Nissan will discuss potential successors to CEO Makoto Uchida at a meeting on its March 11th, as his position has become untenable given the company's worsening performance.
Directors at Japan's third largest automaker Nissan will reportedly discuss potential successors to CEO Makoto Uchida at a meeting on March the 11th. It's due to the worsening performance of the company. That's according to 3 people familiar with the matter. Sources added that candidates being considered include the company's chief financial officer and chief planning officer. And the next CEO could be installed as a temporary or transitional leader. That would give the board more time to find a permanent replacement. The people speaking to Reuters declined to be identified because the information has not been made public. A Nissan representative declined to comment. The March the 11th meeting was first reported by Kyodo News. Shares of Nissan gained 1.8% in Tokyo, outperforming a 2.2% decline in the Nikkei index. The news follows the collapse last month of talks to merge with Honda. The car makers had been discussing a tie-up to create a $60 billion company. But those negotiations were soon strained by disagreements, including over the balance of power between the long-time rivals.
Japan's 7&I Holdings said that talks have begun with Canada's elimination Couche-Tard over a store sale plan that would set the stage for a $47 billion takeover by the Circle K operator.
7-Eleven could be getting closer to a takeover. Japanese owner 7&I said Monday it has begun talks with Canada's Alimentation Couche-Tard over a store sale plan. That may set the stage for a $47 billion takeover by the Circle K operator. 7&I has previously said that US antitrust law would be a barrier to any agreement, as the two companies combined would dominate the convenience store market there. They would have about 20,000 outlets in the United States. In a letter to shareholders, 7&I proposed examining how divesting stores could address that and what buyers might be interested. Last week, Couche-Tard said it had already begun talks with third parties about such a sale. It says it has identified a portfolio of US stores that could be offloaded. Last week also saw 7&I name outside director Stephen Dacus as its new CEO, the first foreigner to hold that post at the Japanese firm. He's been tasked with leading its recovery and responding to the takeover offer. At a news conference on Friday, he said investors needed a quick decision. US investor Artisan Partners, which holds a big stake in the Japanese firm, on Sunday urged 7&I to look again at the Couche-Tard offer. This week, executives from the Canadian firm are expected to visit Tokyo to talk to the media about their bid.
But that's all from us on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates in the business globe. Until then, I'm Vinod Surya. Thank you for watching and have a very good night.